Peace hopes are rising around Iran and the Strait of Hormuz, but gold is rising too. That sounds backward if your entire gold model is simply fear goes up, gold goes up. Apparently the safe haven missed the memo. Reuters reported gold climbing for a fourth straight session and touching a 7-week high on August 6th. At the same time, markets were getting more hopeful about diplomacy and a possible reopening of Hormuz. So one classic reason to own gold was getting weaker, not stronger. But gold has more than one boss. The first competing force is Treasury yields, because gold pays no interest while government bonds do. When yields fall, the opportunity cost of holding gold falls with them. Suddenly the shiny rock is competing against a bond paycheck that just got a little less impressive. The second force is the dollar. A weaker dollar can make dollar-priced gold cheaper for buyers using other currencies. So even if the fear premium fades, lower yields and a softer dollar can keep the financial backdrop supportive. This is why the peace headline can look bearish for gold, while the macro plumbing underneath it looks bullish. Think of gold as an employee standing beside the exit sign after the emergency starts calming down. The peace stove says, "Great, you can clock out now." Then yields and the dollar both drop another box on the desk. Gold looks at the paperwork and decides the shift is apparently not over. That gives us 3 useful scenarios instead of one heroic prediction. Base case: peace progress continues, yields and the dollar stay soft, and gold holds firm rather than collapsing. Bull case: softer economic data pushes yields and the dollar lower enough to overwhelm the fading fear premium. Bear case: peace improves but yields and the dollar rebound, removing both the fear bid and the macro support. The key point is not that peace is secretly bullish for gold. It is that gold reacts to several forces, and those forces can move in opposite directions at the same time. The next test is Friday, when the July U.S. jobs report arrives at 8:30 a.m. Eastern. A stronger report could lift yields and the dollar, while a weaker report could pressure both. Either reaction would give us a cleaner test of what is actually driving gold now. If gold stays firm while peace progress continues and yields remain soft, the rates and dollar explanation gets stronger. If yields and the dollar jump and gold rolls over, the contradiction starts disappearing. And if conflict suddenly worsens again, this entire peace versus rates setup becomes the wrong framework. So do not ask whether gold is a fear trade. Ask which driver is paying the biggest bill today, because that is the one price is listening to.